Welcome to the Bloggerian. Today we're doing something really crucial for every retiree, elder and family, navigating the complexities of aging in India. We're breaking down the entire toolkit of central government support for elders who are struggling with dearness and the cost of living. I'm Priya Chakraborty and my co-host is Anil Agrawal.
And that's absolutely essential. I mean, when most people think of senior benefits, they just picture a simple monthly pension check. But that perspective, it really limits what they can actually claim.
So what's the scale we're talking about here?
Well, to grasp the urgency, you have to remember the context. Over 10.5% of India's population, that's what, around 140 million people, are now elderly, age 60 and above. These schemes aren't luxuries. They're fundamental for ensuring security and dignity against rising costs in old age.
So, our mission today is pretty straightforward. We want to equip you with a roadmap of the help available. The goal is so you don't miss out on these crucial financial anchors, healthcare safety nets, or tax relief measures. This knowledge can literally change a family's financial resilience. I mean, did you even know you're entitled to priority in hospital queues just by showing proof of age, or that some government backed investment schemes can offer an interest rate of over 8%? We're going to walk you through exactly how it all works.
Okay, so let's start where most people look first: core income stability. We should probably dig into the basic monthly income and pension plans. And what's fascinating here is how the government sort of separates welfare support from investment-backed savings. For immediate essential income, we have the Indira Gandhi National Old Age Pension Scheme. We'll just call it an IGNU APS. It's a foundational welfare scheme, and it strictly targets those over 60 who fall below the official poverty line.
I'm looking at the numbers here. Leaving aside state top up for now, the central government's direct contribution is 200 rupees a month for ages 60 to 79.
Okay, that doesn't sound like a huge amount, but it brings us to the crucial detail that so many people overlook.
Okay.
The central government portion is indeed 200, and it bumps up to 500 once a senior hits 80. But, and this is the key, nearly every single state government provides a mandatory top-up.
A top up, so they add more money to it.
Exactly. Many states augment this significantly. They often double, triple, or even quadruple the total monthly payout. So in many regions, the total amount, it can be 1,000 rupees or more. And that combined contribution, reaching nearly 25 million people, is absolutely vital.
Okay, that context makes a huge difference.
But what about seniors who have some savings? They need stability, but also, decent returns.
Then we shift gears to something like the Pradhan Mantri Via Vandana Yojana or PMVVY. It's managed by the LIC.
Okay, this one is an investment scheme. Seniors aged 60 and over can invest up to 15 lakh rupees, and in return, they get a fixed guaranteed monthly pension for 10 years.
And what makes this so attractive compared to just, say, a fixed deposit at a bank?
Security and the rate of return. As of mid-2025, it's offering an assured return of around 7.4% per annum. That guaranteed high return rate backed by the government is often much better than what banks can offer right now. It's a very safe place to park retirement money for predictable income.
And moving on from that, let's quickly touch on employment history. If you worked in the organized sector like PSB bank retirees, you're probably covered by the employees pension scheme, right? From 1995.
Absolutely. If you made contributions to your EPF account during your working life, you automatically qualify for this pension after age 58. It's just a matter of applying through the EPFO portal with Form 10D. It's something that honestly often gets missed if the employer didn't help with it during retirement.
And we also have the more flexible national pension system, the NPS. Right? The NPS is open to everyone now, not just government staff. It functions differently and it's market linked during your working life.
Okay, then at 60, you get a partial lump sum, and you have to use the rest to buy a monthly annuity. It's a great tool for both retirement savings and tax saving.
So if I'm listening to this and trying to help an elderly parent get started, where do I focus my effort first on these income schemes?
Two areas. First, check eligibility for that state top-up component of IGNOU EPS. Go to the local commune or Gram Panchayat office. Don't let the low central amount put you off. And second, make sure any past employment pension is flowing. Check the EPFO portal if you have any doubts. The biggest tip is that paperwork delays are the main obstacle, not eligibility.
That's a great transition because once income is sorted, the next massive financial risk is, of course, medical expenses. Let's look at the government's insurance safety net. This is where the benefits become truly critical.
This is non-negotiable knowledge for anyone over 60. The massive scheme here is Ayushman Bharat, specifically the Pradhan Mantri Jan Arogya Yojana, PMJAI. This is a complete game changer because it provides up to 5 lakh rupees per year cover for hospital treatment for economically disadvantaged families.
5 lakh rupees, that's a huge deal. What makes this scheme stand out so much?
One word, cashless. It removes the panic. When a senior from an eligible family is admitted to an empaneled hospital, they get treatment without paying a single rupee upfront. This directly fights the leading cause of poverty in India, which is catastrophic health spending.
We've talked about the big insurance blanket, but what about programs that specialize in age-related care?
Yes, that would be the National Program for Healthcare of the Elderly, or NPHCE. Now, this isn't insurance, it's infrastructure. It means dedicated geriatric clinics are being set up in district hospitals all over the country. They offer focused care for age-related ailments, free basic medicines, and just tailored, unhurried attention for elders.
And what about people who aren't covered under PMJJ but still want some form of government-backed insurance?
They can look at the Varistha Mediclaim policy. It's usually offered by public sector insurers like National Insurance. It gives you health cover up to 2 lakh rupees for seniors aged 60 to 80. And the really important part is that it covers pre-existing diseases after a waiting period. That's critical for seniors.
And for retired government workers, there's the CGHS, right?
The Central Government Health Scheme, yes. Retired central government employees and their dependents get subsidized access to a huge network of government hospitals and diagnostic centers. It requires a small monthly contribution, but the discounted access to quality care is priceless.
So if we put this all together, the practical reality is a senior could use those NPHCE clinics for routine checkups and then combine a policy like Varistha with the subsidized rates at government hospitals.
Precisely. It's all about stacking the benefits to minimize your out-of-pocket risk during a medical crisis.
Okay, let's explore something a bit more well-known that offers immediate relief. Travel and accommodation discounts, and there's a surprising gender-based difference here that I think is worth noting.
Yes, this is one of the most popular perks. The Indian Railways really leads the way here. For men aged 60 and above, there's a substantial 40% discount on the base fare across all classes.
And for women, I hear it's even better.
For women, the concession starts earlier, at age 58, and it's a whopping 50% discount on the base fare.
50%. That's literally half-price travel. Does this apply to the premium trains too?
It does. Rajdhani, Shatabdi, and Duronto, all of them.
That's fantastic. But we often hear about the challenges getting a lower berth or a wheelchair. Is that the reality on the ground?
That's a critical question. The facilities do exist, wheelchairs, ramps, priority quotas for lower berths. But the reality depends heavily on demand and how early you book. The system is there, but you have to select the senior citizen quota during booking or those spots will be gone. You have to be proactive.
Right? And beyond the rails, what about flying or accommodation?
Many major domestic airlines, like Air India and Indigo, offer discounts. They range from 5% up to 50%, but usually just on the basic fare. You really have to check the airline's fine print though, and you must show your age proof at check-in.
And if they're traveling and need a place to stay?
Government-run hotels and tourist lodges, like those run by ITDC or state tourism boards, often have rooms at subsidized rates for seniors. And you should also look out for niche state schemes. Some states run a Tirth Yatra Yojana, a pilgrimage scheme that organizes and fully funds group trips. They cover everything: accommodation, meals, guidance.
Let's shift now to what might be the biggest immediate financial win for many: tax relief. We need to break down how the government lightens the tax burden.
Okay, the foundational benefit here is the huge lift in the basic tax exemption limit. For a typical person under 60, the exemption is 2,50,000 rupees. But for senior citizens, that's 60 to 79, that limit goes up to 3 lakh rupees.
And for very senior citizens, the difference is massive.
Yes, for those aged 80 and above, the exemption threshold jumps to 5 lakh rupees. For anyone whose only income is from a pension or interest, this often means their entire tax liability is just wiped out. It's a massive financial aid.
Beyond that basic threshold, we have to talk about that great deduction for interest income.
Yes, Section 80 KTTB. Under this section, up to 50,000 rupees of interest you earn annually on savings accounts and fixed deposits is completely tax-free. So if you earn, say 60,000 in interest, only 10,000 is actually taxable.
And a quick note on bureaucracy: no advance tax needed.
Correct. Seniors who don't have income from a business or a profession are exempt from paying advance tax. It just avoids the stress of quarterly calculations and payments.
And let's quickly revisit those health-related tax deductions.
Okay, under Section 80D, seniors can claim up to 50,000 rupees against health insurance premiums. And if the senior is over 80 and has a specific severe illness, like cancer or a chronic neurological disease, they can claim an even larger deduction, up to 1 lakh rupees under Section 80DDB.
We mentioned the SCSS earlier, the Senior Citizen Savings Scheme. We should really reiterate the benefits here.
SCSS is still one of the best government-backed investment options. It offers a strong guaranteed return rate around 8.2% as of mid-2025. It's secure, high-yielding, and just perfectly tailored for retirement savings.
And one final practical perk for those who aren't so tech-savvy:
Help is available. Seniors over 80 are allowed to file their income tax returns using physical paper forms. They can bypass the mandatory online filing required for everyone else.
we've covered the entire spectrum of benefits. Now, the most challenging part: moving from knowing about them to actually accessing them, paperwork.
Paperwork is the single biggest reason seniors miss out. For almost every scheme, you need 4 basic things: proof of age, like an Aadhaar or PAN card; proof of address, your bank account details, and a few recent photos.
Where does someone from a village even go to apply for all these different things? It seems so decentralized.
It is. For welfare pensions like IGNOEPS, you go to the local municipal office or the Gram Panchayat. For investment schemes like PMVVY, you have to visit an LIC branch. And for health schemes like PMJAI, enrollment is often handled at the empaneled hospitals.
What's the most critical administrative challenge for seniors?
Document inaccuracy. The biggest hurdle is making sure all your documents, Aadhaar, bank passbook, proof of age match perfectly. Any difference in a name or a date will lead to immediate rejection and huge delays.
And a crucial warning about the process itself.
This is vital. Enrollment in central government welfare schemes is free. You should never have to pay hidden fees or charges. If any official asks for extra money to process your application, that's a red flag and it should be reported.
And if a senior needs help navigating all this,
Use official resources. The government operates the 1567 Senior Citizens Helpline. It's specifically designed to help with these kinds of queries. Persistence is key.
this deep dive shows that schemes for seniors offer so much more than a token pension. It's a layered system covering health crisis, travel, and tax relief. It can mean the difference between barely existing and living.
Exactly. And if we connect this to the bigger picture, these schemes, particularly the investment ones, they aren't just about survival. We talked about how PMVVY and SCSS offer guaranteed high returns, 7.4 to 8.2%, often with tax-free interest.
And this raises an important question for everyone listening. How much more secure could retirement be if planning starts earlier? If you maximize these investment windows and tax exemptions through long term compounding, instead of waiting until you're 60 to do the necessary, that's something for us all to mull over.
That is a powerful final thought. Take this guide, use this information, and make sure the seniors in your life claim every single benefit they deserve. Please share, like, comment, and subscribe.